So welcome to the Bitcoin subject of the course. In this module, we're going to be talking about the current monetary system. Now, we need to learn about the current monetary system, or we need to refresh our memories of the current monetary system before the next module where we start to actually talk about Bitcoin itself. Okay, so unfortunately, we do have to go through this just to refresh our minds and understand exactly why it is that we need this new revolutionary monetary system. Okay, so again, briefly, the contents of this module: we've got transactions, central authorities, short-term and long-term debt cycles, inflation, the cost of control, and what is the solution. Now, we all know what the solution is, okay? That's going to tie nicely on to the next module. So let's get on with it. Transactions. So the current monetary system, the economy is the sum of all of its transactions between people, businesses, and governments, okay? Over all markets and all industries within an economy, it all comes down to transactions, okay? And remember, with Bitcoin, that's one of the most important properties of the currency. It's transactional properties. So, central authorities, okay? Relatively straightforward. The government collects its taxes, spends large amounts of money, and the central banks controls interest rates and printing cash. They work together. Okay, these centralized authorities, yes, there's two, however, they work together side by side. Okay, they help each other out. And these central authorities are what we're trying to revolutionize with new currencies, with cryptocurrencies. So, in terms of the economy, we go through debt cycles. Now, there's short-term and long-term, and as you can see by the graphic there, we've got long-term productivity growth first and foremost. Okay, as populations increase, productivity will inevitably grow within countries. Okay, as more goods are produced, as there are more people to produce those goods and to work, the country's economy increases accordingly. Okay, so over time there is an increase in the long-term productivity growth. Now, on the second chart there, we see the long-term debt cycle. It's a big S-shaped curve. Now, along that S-shaped curve of the long-term debt cycle, we have short-term debt cycles. Okay, so long-term happens every kind of decade or so, short-term every couple of years. So in terms of economic growth within a country, within a country's economy, when productivity increases, people's income increases. There are more transactions taking place within markets and economies, and people's income increases. Okay, someone's spending is another person's income. So when people have more income, they're more creditworthy, and they go to the banks to borrow more money to invest in themselves or their businesses. Okay, or to get mortgages, for example, and the banks lend this money. Because people have more income, they're more creditworthy, they borrow more, the banks lend more. Okay, and what the banks are doing is they are essentially earning money through interest. Okay, so they're creating this instant stimulus to the economy in the form of credit, which becomes debt. Okay, to whoever is repaying that loan, it becomes debt. And that's why we have these debt cycles, okay? That's where the name comes from. So the banks lend out credit, credit instantly becomes debt, and the debt must be repaid with interest. The interest is how the banks make their money. Okay. Now, in terms of debt, what happens is, essentially when you take on debt, as you are more creditworthy, okay, you are accepted for higher amounts of credit, okay, of loans. However, you must repay these loans eventually. And so it's essentially like borrowing from your future self. There must become a time where you repay these debts. Okay, so in terms of having credit given to you as a loan, it provides an instant stimulus to the economy. And because that happens, people start to spend more. And as people spend more, people's income increases and they become more creditworthy. And the banks lend them money. Okay, so this instant stimulus almost has a chain reaction. Now, the only downside is time, because eventually there will become a time, okay, where as things are going good and there's long-term productivity growth, the banks will start to raise their interest rates. They get a little bit greedy. Okay, they want to earn more money. And so when they do this, people actually start to borrow less. Married with the time element, people have to actually start repaying these loans and some in terms of interest. And so people stop borrowing money because of these high interest rates. And they stop borrowing money so that they can repay their debts. Okay? And over time, this causes a short-term economic decline because people aren't spending as much money, so they aren't increasing other people's income, which means they're not as creditworthy and less borrowing takes place. Okay? And in terms of a long-term debt cycle, over decades of these short-term cycles, okay, the cycles get progressively worse as debt burdens increase. Okay, and as debts start to grow faster than they can be repaid, because remember, if you're borrowing from your future self and some, okay, and everyone stops spending money because these instant stimuluses of credit are not available anymore because people are less creditworthy, that means your income decreases, yet your expenses, the debts and loans that you must repay with interest, increase. Okay, that's a debt burden. So debts begin to grow faster than they can be repaid as income decreases in an economic decline. Okay, hopefully you're following along here. Okay, and central authorities now have a deleveraging situation to deal with. Okay, now in a short-term debt cycle, very simply, the banks can halt their interest rates all the way down to zero, and all of a sudden people want to start borrowing again, and it provides the instant stimulus, and the cycle briefly recovers. Now, in terms of a long-term debt cycle, okay, when the correct policies are not necessarily followed exactly, and one of the easiest ways to increase the economy again is to simply print more cash. Now, hopefully you're seeing the alignment between why we don't like this printing of cash. Okay, as we've previously talked about, printing cash is not good. Okay, and governments and central banks will do this to provide the instant stimulus to the economy again. They're printing more cash, they're putting more cash in the system. Okay, because when eventually over long-term debt cycles, putting interest rates down to zero stops working. Okay, people don't want to borrow anyway. And so this is the fastest way and the easiest way to stimulate the economy for economic growth again. Now again, we know this already. Printing cash causes inflation, and the enemy is inflation. So inflation occurs when more cash is introduced into the circulation without the correct policies in place. Okay, as inflationary activities increase, for example, the printing of cash, and deflationary activities don't necessarily happen because the correct policies aren't being followed. For example, a deflationary way of dealing with debt cycles is to cut existing interest rates, okay? So even though interest rates may have been agreed between a bank and an individual or business, those policies are reviewed, interest rates are changed, lowered, cut, okay? And it makes it easier for people to repay and for the economy to recover. That's a deflationary policy. But inflationary policy is just printing more money into the system, okay? So prices of goods and the cost of living increases with inflation. As more money is printed, the cost of living increases, and we get this inflation effect. Marry that up with the fact that people's incomes have been declining in an economic decline, and we have ourselves a very difficult situation which has been created by people, okay? Because we are in charge of our cash and our currency as a fiat currency, we give ourselves a massive headache. Okay, so this causes inflation and decreases the value of assets and savings. So all of this is negatively affecting the economy, even though you stimulate it very rapidly, it's no good, okay? And again, we know inflation decreases your purchasing power. They're all red elements. Nothing good comes out of what goes on in the current monetary system. So what is the cost of control? Now, I briefly mentioned this. Central authorities are run by people, okay? And people are notorious for human error or being greedy, okay? We have certain attributes which make us biased in certain scenarios. And as a whole, countries want economic growth. They want that long-term productivity growth. But they also want it for wealth. And a country is also wants power. They want wealth and power, okay, in the global economy, in the global markets, as a country themselves. So people have too much control over the value of your money. Okay, that entire system, every step of the way, is controlled by human decision. Okay, and that is what decreases the value of your fiat currencies, and that's what Bitcoin is going to change. That's the fundamental element, that these are the problems which Bitcoin is solving. Where there is a problem, there will always be a solution. Okay. Now, the cost of living should not be controlled by people. Again, going back to people have too much control. Okay, the trust elements are being wiped away by this current monetary system and the decreasing of purchasing power. Okay, we are ruining our own currencies. So then, without mentioning cryptocurrency, what would be the solution? Well, as a whole, the solution to all of the problems that I've just mentioned must be some form of decentralized, secure financial network that has no central authority and allows the public to access an asset with the same attributes as currency. Okay, those elements as a whole would, in theory, solve this problem. And guess what? We have it. We have the solution. It's clearly Bitcoin. And we also have other elements of financial services like DeFi, which is decentralized finance. And we're going to learn more about DeFi. Okay, you may have heard of it before in the crypto space. We're going to learn about that a little bit more when we come to learning about Ethereum in the next and final subject of the course. Okay, so that is the current monetary system covered. We needed to do that to refresh our memory over what actually goes on and what happens in our economy and with our monetary systems and who actually has the power and control. Now again, all of these themes are very, very samey, okay? It's all the same thing. It's centralized authorities, central banks, printing money, the loss of value in your fiat currency, and again the solution of cryptocurrencies. mainly Bitcoin. Okay, so now we've covered this, we can actually get on to learning about Bitcoin itself. And again, in the previous modules and subjects, we've learnt about the technology behind Bitcoin and cryptocurrencies. So now we're in a really good situation to start learning about Bitcoin itself. And I will see you in that very module next.